the money that we use, the US dollars and the euros and so on, that's not money, that's a currency. The only way to really measure the value of these currencies is against real money, which is gold and silver. Gold broke out, took off, and every correction just came back, and now more viciously. That's a huge indicator that the rules have changed. The game is totally different.
Are we watching the moment, Pete, where you think maybe price control starts to fail?
At some point, this market's going to break loose, which is happening now, and you're either in it or you're just watching it. I doubt we'll see silver price ever go below 50.
Where does silver go when this dam, the price control mechanism, finally does break on silver?
This is Little by Little with Andy Schectman.
All right, welcome back, everybody, to another episode of Little by Little. This one's special for me. This is a guy that I go way back with. I don't know how many years, well north of 20, when he was a very young man. The funny thing is he still looks exactly the same. Honestly, he literally hasn't aged for a second. I don't know, maybe it's something in the water in Prague where he's at, but in any case, I want to welcome in the owner of both sites, GoldSeek and SilverSeek.com, one of the best people I've met in my career, Peter Spina. Peter, how you doing, brother? Welcome in.
Hey, Andy, great to see you, man. Yeah, we go way back to when I was buying silver from you for well under $20 an ounce, closer to $10 an ounce. So I guess those days have ended.
Yeah, you were a very young man back in Colorado. I remember having lunch with you and a guy named Greg way back when. And I remember you told something to me that I think, if I'm not mistaken, that when you were 17 years old, your father purchased a couple of domains for you, GoldSeek, SilverSeek. Does that sound right so far?
Yeah, he got me connected to the internet when I was about 14, and it was actually at the age of 15 I made 3 websites. One of them was focused on investing in gold. So yeah,
well,
that was 1995.
And so it was about, it was 5, 6, 7 years after that we connected. But I guess the first question I have for you is that most people stumble onto gold late. Now, I didn't, and you didn't. You saw it as a teenager. What did you understand about money back then, Peter, that people still don't understand today? Because I like to break it down to the very core essence of what gold and silver are to people. To me, it's wealth. What is it to you?
Well, back then, what was interesting is I was introduced to it because my parents came from a communist system. They escaped a communist country, and they knew very well of a 2-tier currency system, the kind of the black market rate and the official government rate. And really how you could only protect yourself through these inflationary periods using gold. It's the only thing that would save you, or even more so if you needed to escape the country. What are you going to take with you? Your communist currency is not going to have a lot of value outside of the system you're in. So that was kind of the introduction to it. They were very well versed in what can happen to money, to currency, and what money is. Actually, I think that's a big important differentiator, is to understand that the money that we use, the US dollars and the euros and so on, that's not money, that's a currency. And it really doesn't hold its value, that over time it returns, so quote unquote, to its intrinsic value. And the only way to really measure the value of these currencies is against real money, which is gold and silver. And over the long term, timing is important, because there are periods of time like where we've had the US dollar doing quite well against the gold price, and it was holding quite steadily. But yeah, pretty much around the time I really got introduced to the internet and started investing more heavily into the gold, silver stocks and into gold and silver bullion, things were starting to really change. And that the first things that changed was that the budget deficits were starting to get a lot more aggressive, and the debt was piling on, and things were starting to get out of place. And then we had the .com bubble hit. So it was kind of the first little appetizer to what was starting to develop into a much larger and more serious situation, which we find ourselves today, 25 plus years later.
Yeah, right on. Well said. Couldn't agree more. To me, the intriguing part is I look back at my career, and as a 19-year-old kid started in this industry, no one understood anything that my friends that I was doing, nor did they want to. And I always have admired people who start in this field young and start to understand at an early age what money is, what currency is, what economics are, and how they relate to our future and to our current existence. So that brings me back to what you were just talking about, and the fundamentals right now are definitely tightening. And we've talked about for a long time now the record central bank buying, the years of strong performance in both gold and silver. I mean, really strong performance, right? It's the tortoise, not the hare. Gold has doubled the 10-year treasury. It's beaten the S&P 500 for 25 years cumulatively. If you were one of the people who reinvested your dividends, you almost caught gold. Most people don't do that. And now we see gold and silver really starting to take off. So with all of that said, Pete, why do you think investors still dismiss precious metals? Why do you think so many people, that maybe you call buddies, that I call friends, people that that are well informed, maybe just reading the wrong stuff, not the wonderful stuff that I read every day on goldseek.com. And by the way, everyone out there, if you're looking for a great place to get information and to check out the spot price, Gold Seek, Silver Seek, they're the top of the food chain as far as I'm concerned. But why do you think so many people continue to miss what's really happening?
Well, I think it's a cultural phenomena, and I noticed this going through university in Colorado. The education was severely lacking, and I did take some business classes, which I found to be quite interesting in economics and finance. And boy, my own professor was mocking gold as bottom of 2000. Why would you touch that? We're in a new era. It's barbaric metal. We have all these new things, and we figured out how to manage debt and deficits. And I'm just sitting there like, wow, that's not what I'm hearing from my side, from my parents, my dad telling me, that things are getting more and more difficult, and it's at some point things have to change. And it's easy to be, especially in the U.S. where we have the imperial dollar, like I like to call it. It's the world's reserve fiat currency. And the rest of the world has been supporting the system through our lifetime. So it's not easy to really to see the risks and understand that that this could come to an end at some point in our lifetime. And also, I think it's the culture of savings. In America, I went to university. The first thing I got there was a credit card. They're handing out credit left and right. And thankfully, I had multiple jobs, and I used the credit card to actually buy some precious metals with it. So I was trying to leverage that in different ways. But I learned from a very young age that you only buy things with the money that you have. You save, and then you buy things when you can. And that's a much different cultural phenomena that's taking place right now for many years. And it goes from the top, from the government level. They don't live within their means. They spend more than they take in. They're very irresponsible. So we don't have any great leadership that shows us how we're supposed to, to save properly. Whereas you go to different cultures, you see it more in Central and Eastern European cultures. You're really thrifty. When there's high inflation rates, like a couple of years ago, when the inflation rate hit 20% here, the first thing people did was cut back their spending and really, adjusted really quickly as possible. And they don't have the same kind of credit availability and easy credit. If you get a credit card here, you actually have to go in for an interview. They're very careful on who gets credit. Very, very different way of approaching debt. So I think culturally that's a big issue, is that savings isn't looked upon as much and as it should be. It's a consumer based society, and it's really up to the individual to change that, because we're not going to get it from our cultural icons or our leadership in government, and so on. So I think that's a big thing missing. And of course, gold's not taught in the textbooks at all. It's, as far as when I went to school, it was a joke. It was something that, yeah, again, we no longer need it anymore. We figured it out. We have a new system and so on. So I think it's a lack of knowing your history, your monetary history. And one thing that I think is very big problem is that we don't even learn about what happened in 1933 with the confiscation of gold. One of the biggest seizures of personal assets, something that should be taught and understood. That's something we should never do again. Obviously, I don't think that's going to happen this time, but gold is a huge part of our history, and it's not understood, it's not taught, it's dismissed, and that's I think a big reason why almost nobody owns it right now in the West. It's very, very minimally owned.
Yeah, I hope people are listening to you, Peter. This is why I um, always found you to be someone very authentic and someone even though I was a little bit older and you could completely and totally relate to as a friend. You got it at a level and at an age when most people wouldn't even begin to think of it. Most people getting those credit cards in college and going out and buying a 12 pack of beer or something else, and you're buying gold and silver. You go to school, and although you enjoy learning from a professor who focuses obviously on John Maynard Keynes and his theories of economics, doesn't quite resonate with you because you're learning from your parents real life. And I guess you could say that's a little bit more like the Austrian style of things, where it's about savings, investment, and reinvestment. Where my grandfather said to me, no, 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 I don't ever buy anything unless I have enough to buy it. I don't use credit. He was a product of the Great Depression, and your parents were a product of living in a communist country and understanding that, there are no free lunches. And you're right, we aren't educated, right? We are a country that learns about things, but perhaps maybe not learning about things on a broader perspective, focusing on Keynesian economics, not learning about Austrian economics, which to me is the foundation of a solid society: savings, investment, and reinvestment. And really, that's kind of what you were even doing with taking out some credit. You were investing in it. And these are the things that I think younger people should really learn. In fact, many of the things that we are taught in school is so far such a deviation from what they should learn in real life to help them. Something as simple as the law of 70 seconds or things like that when we talk about debt and debt accumulation and that kind of stuff. I appreciate your perspective. It's spot on. So I want to move on here. And I saw something you wrote on X, and it resonated with me once again. And you said, this time it feels different. Now, I think you were referring to silver equities, I believe, in the tweet. But for me, it resonates on a broader level, right? And I say it to you for things such as we recently saw gold get smashed down by $100 an ounce. And then somehow, some way, bang, it recovers almost immediately. Now, you would agree with me, I believe, without putting words in your mouth. I've known you long enough, and you followed this as close as anyone, that these kinds of smashes used to matter. They used to break the neck of the rally. Paper sell-offs used to define this market, right? Where it would get to a point like in 2011, and then they literally cut its Achilles, and it falls down and crumples to the ground and doesn't come back for years. Now they're being shrugged off. So to me, when you say this time feels different, it's much broader than just equities and their performance. Are we watching the moment, Pete, where you think maybe price control starts to fail?
Yeah, I mean, definitely. It started with gold. Gold broke out of that $2,000 level, took off, and every correction just came back, and even now more viciously. That's a huge indicator that the rules have changed. The game is totally different. And if for gold and silver bugs that have washes for many years, for decades, we've got conditioned to get hit over the head constantly. We've been quite depressed as an investor group because we've been so dismissed, we've been so undervalued, and now that things are really breaking out and happening very rapid rate at a pace that it's almost like a blink of an eye. Suddenly things are totally different. Yeah, this is a very quick move, and we talked about it for many years. At some point, this market's going to break loose, which is happening now, and you're either in it or you're just watching it. You're just going to continue to wait for the pullback, the next pullback, the next pullback, and it's not happening, and it's not happening again, and it's quite amazing because this is historical. This is things that you really don't witness in markets, but at the same time, if you recognize that the prices have been so depressed and suppressed that game is over, then now we're quickly, it's almost like a step function higher, moving to this next level. So my tweet the other day was about more the equity side, but first it happened with gold, and then finally silver had its breakout here, and people are just amazed, like, wow, look at it go. This can't be real. This can't sustain itself. Well, again, just look at like the perspective of the gold to silver ratio. It's been so depressed. It's been so unloved. No one cared about it anymore, and all of a sudden, snaps like that, and it doesn't take a lot to really to get things going. And I think on the equity side, silver gold stocks have been kind of the last group to really catch up to the metal prices. They should be doing much, much better than they are. So I think now that's getting recognition. And we see it. The Western investor, the retail investor into precious metals has been absent for many years. And then it wasn't until really last year you started to see the gold interest and then the silver buying interest kick on through the ETFs. And then just recently, the silver retail buyer in the West kind of came back out of the dead. They've been missing for years, even though, for the last 3, 4, 5 years, they should have been accumulating. They've been net sellers, the ETFs. And I've talked to different dealers, bullion dealers. They've been saying the majority of people until recently were trying to sell their silver. It's quite amazing. And obviously it's a reflection of, the mainstream media. No one's really pushing gold or silver. They've been talking more about crypto and AI and other, kind of bubble stocks or markets. So it really hasn't been something that most people have heard about. And now the price is moving so quickly. Well, you kind of have a hard time ignoring it. So it's starting to get more attention. So yeah, it's a big shift. It's happening quickly, and the volatility will be quite high, especially more so in silver and maybe than gold. But silver is making a quick revaluation attempt right now, and it's really it's quite amazing to see to those that have watched it for such a long time. Because again, we've been so conditioned to expect this to get smashed and crumble and take a long time to rebuild itself. But as you can see, the strength of the bull market is determined, or is shown, representing how quickly these sell-offs are eaten back up, and the price snaps right back up. The appetite is just massive. So it hasn't abated yet, and it continues to add more buyers into the market as this price moves up, as more, especially now the Western buyers start to recognize what's going on.
Yeah, you mentioned it's repricing, and I would argue, I think that's very well said. To me, it's never been allowed to find its real price discovery. And that's the thing that I think a lot of people miss. Even the so-called analysts who haven't been in this game as long as you and I have. You say things like, well, the buyer just thinks it's going to correct, and it's going to correct. It's going to wait for a pullback. I mean, that sounds like stuff I've heard all the way up. I can tell you've been doing this for a long time just by saying that. When you try and talk to people, it can't stay. Look, when you're talking about something that has been suppressed for a very long time, and we don't need to get into the debate. I'm not talking you, I'm talking about anyone, about the fact that gold and silver have been suppressed for various reasons for a very long time. I talk about it on every show. The fact that it hasn't been allowed to find real price discovery, I think you can put a kind of an asterisk by technical analysis or even past belief structures about the way this market goes, because it does seem like things are changing. It does seem like delivery at the highest level is beginning, as Jim Sinclair always used to say, overwhelm the paper suppression. So just a couple more questions, Pete, and I really appreciate your time, brother. So let's talk about the central banks for a minute. The central banks have been accumulating gold for years. And when I say gold, to a smaller degree, I mean silver too. We're beginning to see that. But for the moment, gold. Do you think that these central banks are quietly preparing, especially those of the global south, for some sort of a monetary transition? Or is this just simply hedging against the West, the President Trump, the fall of the dollar? Is it something bigger, or is it just hedging?
Well, it's a trend that has been taking place for many years, but I think the big trigger that accelerated this move into gold, mostly by central banks, was the war really exploding in Ukraine in 2022. When the dollar was weaponized, that was a clear signal to those who may have opposing views or maybe on the other side of the dollar. The U.S. is, not as friendly, whether it's China, Brazil, the BRICS nations. They saw this as a clear sign that, well, we could get in a position where, your dollars are gone overnight. With Russia, they had maybe $10 billion in cash in dollars. Outside of that, everything is electronic. It just takes a flip of a switch and all of a sudden you're cut off. That money goes bye-bye. It's very easy to control that. With physical, that's not the case. So it's like it's the only alternative out there. What other fiat currency is there to compete with the U.S. dollar? Well, not the euro. That's a mess as well. And the Chinese yuan, that's got a lot of work. They're trying to compete with the dollar, but it's still not quite there. So really, the only unit of trust that exists out there is gold. So, as Greenspan said at one time, it's the premier currency. Gold is a premier currency, especially when trust breaks down among trading partners, among all sorts of international partners who no longer can view it as a currency that they can use safely. And even more so, it's being debased at an aggressive rate. So the change, the shift in 2022 was just accelerating the timelines forward. And now with Trump in office, we have a whole another bunch of it's a new world order of chaos taking place where no one really knows what's going to happen next. So it just accelerating more buying interest into the precious metals, into gold. It is quite extraordinary because we're hitting record levels of consumption. Central banks are buying over 1,000 tons a year, but as percentage of their balance sheet assets, it's still quite a ways away. But they see that as their only kind of safe option here. And you look at the finances of the United States, my goodness, boy, we continue to run massive deficits. The debt is nearing $40 trillion. We have massive unfunded liabilities. Uh, Trade structures are being dismantled. We've been living through this period where we've been producing dollars, exporting dollars in debt, and the rest of the world send us goods and services, and that's changing. So when you have a reversal of these trends, all of a sudden you have multiple drivers now feeding into this gold bull market, or more. It's more of a bear market in the fiat currencies, and there's obviously a lot of different issues out there. There's debt. There's a huge amount of derivatives. There's a lot of leveraged debt out there. A lot of issues that haven't been resolved, and then geopolitically and so on. It's just the case for gold has never been stronger. So your best alternative right now is gold. It's been exceeding the as I think it's ahead of the U.S. Treasuries now on the balance sheets of central banks, and they're not slowing down. And it's just not, for example, it's just not China buying, or it's not just the BRICS nations, but here in the Czech Republic, they've been buying steadily every month. They want to have 1 to 200 tons in reserves. And next door, Poland, as well, they've been buying. They want to exceed now their 20%. Their gold reserves will be more than 20% of their forex assets, foreign international reserves assets. You see other countries as well doing this that are not part officially of the BRICS. So it's a lot of other countries doing this as well. So it's a global buying spree. It's not going to end anytime soon, especially now with more and more problems taking place. We're talking right now, right after a weekend where more tariff threats were issued because of the Greenland issue. So it just doesn't stop, and it's getting worse and worse and more chaotic. And that's just not going to help the situation out. So, boy, there's a confluence of factors. Central banks really don't have any good options. So gold is the way to go.
Right on. One and a half more questions. Pete, your answers are great and kind of answered a few questions I was going to ask you. So we'll just skip right ahead to one last question on silver. And again, inspired by another tweet I saw, you talking about TD Bank and how silly it is that they know better, in my mind, and you alluded to this in your tweet. Not only have they written about the positive things about silver and where it could ultimately go, they talk about it all the time, yet they're foolish enough to put a huge short position out there, tell the world, yeah, we're shorting silver. We think it's going down to 40 something. And we saw what happened when it hit 92 bucks. So with silver and backwardation, delivery delays growing across all of the exchanges, lease rates exploding where the cost to borrow or lease silver, the U.S. calling it a critical mineral, TD Securities itself warning of a tidal wave of risks, as they say, while they were just recently stopped out of their big short at 92 bucks, idiots. Why are institutions still shorting silver, Pete? Is this reckless denial, or is this a sign that the paper market is just losing control? And I guess for all those people out there that want to know Where is silver going? Where does it go when the control finally breaks? Kind of feels like it is breaking. Where do you think silver goes? Then I'm going to ask you one last question on what someone would do, some young person would do who wants to position themselves before the dam breaks. But in this respect, where does silver go when this dam, the price control mechanism, finally does break on silver?
Well, it's a confluence of factors which is driving the silver price right now. The market is just red hot. There's so many sources of buying demand. And like you said, it's a critical metal. It's a strategic metal. It's the greenest precious metal. And for years now, I think we're in the sixth year of structural supply deficits, and that's not something that could be fixed overnight. Well, maybe if they didn't suppress and depress the silver price for so long, we'd have more supply hitting the market. And a quick side note, I saw some all-in sustaining costs for silver miners. It was in the low to mid 20s about a year or two ago. Yeah, it's now in the low 30s. So if you want to bring on more silver production, you're going to start bringing your lower grade, higher cost ounces on as well, on top of general inflation. So pretty soon we're going to have $35, $40 an ounce break even silver prices just to mine it. So you need a big cushion to incentivize and put a lot of capital into new production and new exploration and so on. And that's, I think, another part, the big key here is that you can't just bring this on right away because we've had such a long period of depressed and suppressed prices that the exploration side has been totally decimated. We've had a few discoveries here and there, but nothing to replace the amount of silver we're chowing through. 850 million ounces of mine supply every year. That's very hard. It's not. People in the digital world understand how difficult geology is, how difficult it is to find a deposit, and then with all the environmental and all the other bureaucratic, the permitting, also, it takes years. It can take 3, 5, on the low end, 7 years, 10 years to get a mine going, depending which part of the world and so on. So this is not something that you can fix very easily. You can get some more silver recycling. Maybe some of the industrial demand gets dented and they'll use less silver. They'll try to find some substitutes, but overall, you can't just get rid of silver industrially, and that's one key component of it. And now the investment side has come alive in a big way, which has been dead for a very long time. A lot of the silver investors that I knew back 10 plus years ago were selling, and even until recently selling to buy Bitcoin and other cryptos. So they left the market, and there's been a huge lack of investment demand. And on the flip side, they've been selling silver for years. The silver ETFs were shedding silver until I think about last summer, and then finally switched into a buying mode. Retail has been dead and so on. So you have this huge new demand factor coming back in the market. It's been under owned. You've had already gold running ahead of silver big time. So still showing the silver, what was extremely cheap, is still now it's not super cheap, but it's still pretty cheap on a 50-to-1 ratio. Historically, it's still not overvalued from that perspective. And then you have the whole, I would almost call like a weaponization of silver. It is a strategic critical metal to not just industry, but to defense, to national defense purposes. And having the United States recognize and put this on their critical minerals list is a huge thing. You have China talking about export restrictions and giving special licenses out so they can weaponize the silver, physical silver, very easily. And you have huge short positions out there that some have been covered, but I think a lot of that still exists out there. You have the European banks, especially short heavily silver, paper silver. So yeah, they're just carrying massive losses on their books at some point. Where do they get squeezed and have to cover in the market? And you could have a real super spike higher. But as the inventories tighten and you have huge wholesale and retail demand coming all in at once with dwindling supplies, and you have these issues with silver being, critical strategic metal to major countries, empires, and now you can see a situation where you may have some real problems sourcing silvers depending where you are in the world. So I think there might be some hoarding going on in the West because those at the highest level understand and know what's coming next. We've been going in more and more into different, resource kind of wars. The United States already has created a price floor for certain rare earths with their investment into MP, into the rare earth mining company. They set a 10-year price floor on multiple rare earths. So this was floated even recently. I think last week saw some videos showing up, and maybe Department of Energy. They're talking also about putting some price floors on other metals, because that's the only thing you can really do to encourage and to bring sustained investment. Because again, it's everyone's been hesitant. We've seen the price move up to $50 before, and they get smashed. So there's no interest in putting serious investment into future production when we don't know if the price is going to sustain. Obviously, at this point, I think we're so far down the road that you're not going to see a silver price. I highly doubt we'll see silver price ever go below 50. That sounds like a dream now. There will be some volatility. There might be some big flash, quick crashes, but I think the overall trend is much, much higher. I think it's going to be pretty easy here to hit $100 plus an ounce. And we may, go up to 125, 150 and get, a big pullback under $100, and everyone will say, "Oh, this is the end. This is the end." Well, that's just giving another cycle before the next big move happens higher. There are a lot of paper games still trying to be played, but they're not as effective. They're not working as they used to. We saw with this CME, they raised their margin rates during a holiday week twice,
Yeah.
and during the liquid holiday week, that just reeks of desperation. So, but I'm okay with that. I get the leverage out of the paper markets. It also hurts the short positions. Obviously, the big short positions have huge resources. The banks, they're not like the funds or smaller traders that get squeezed more easily. But eventually, there's going to be a level, and it's going to be very difficult to get these shorts unwound. It's quite opaque, so we don't know the full details. But we have seen some U.S. banks going long on flipping from their shorts to long position, which is a good sign that they finally get what's going on that side. But you look at J.P. Morgan, their true silver stockpile seems to be down to about 75 million ounces. Last week it was 80, and it was 85 below that. So they're kind of slowing down the rise in the silver price by trying to help feed some extra supply into the silver market. But at this rate, if silver keeps getting acquired, accumulated, purchased at physical silver at these rates, there's another big price move still coming down the road. The only thing that I think could change that is if you had a big deflationary crash and if everything just took a big drop. And that's a possibility this year. We have one big correction, but it's going to get bought up. People recognize now there's not many escape windows out of this fiat devaluation. There's just too much debt out there. Foreigners are not buying our debt. They're going to have to start doing more QE. We're going to have to see more printing and keeping rates suppressed. And of course, the whole Federal Reserve thing is a fiasco. We're going to have a new FOMC chair who's going to keep cutting rates. That just gives more incentive to own precious metals and so on. So, boy, things have really come into its favor. And again, I think that so many years of having the price depressed where it has led to the situation where the price can go even much higher than its equilibrium price. So if we're able to be so depressed under the equilibrium price, we can easily go way over the equilibrium price and bubble higher.
Yeah, no doubt. And it's crazy when I think the first time I met you way back when, having lunch in Colorado, silver was probably $7-8 an ounce. And here we are. Yeah, you talk about the margin increase. I think it's silly. Now, it used to break the back of the rally. Now, all it does is, to your point, shakes loose the folks on margin. And it's funny, the day after Christmas, they raise it by 30%. So on Christmas, the day after the 26th, you needed 21,000 to control a 5,000 ounce contract. In your margin account, you needed 21,000 to control at the time about 300,000+ in silver. And then the next day they said, no, now it needs to be 27,000. That increase used to break the back of the rally. Now, all it does is shake loose those that shouldn't be playing in this sandbox on margin, and the big deliveries, to which we've seen over 100 million ounces delivered in the last 40 days, 68+ million in December, the largest December delivery ever, and then about 40+ million already so far here in January. We're beginning to see that it's just, thank you very much, subsidy for those standing for delivery. Pete, you're amazing, brother. I've always felt that about you. I've always considered you a friend in this industry, or all the years I've known you. It's always wonderful to see you. I can't wait to see you next week at Jay Martin's Vancouver Resource Investment Conference, one of the two conferences I will never miss. But before I let you go, Pete, tell everyone what I've known for a long time. and that is tell everyone a little bit about Gold Seek, Silver Seek, where they can find your work, why that should be their go-to source, not only for information, but also just to check out the spot price and that kind of stuff. And again, thanks for coming on, brother. But tell everyone a little bit about your two sites.
Well, thank you, Andy. I appreciate it. It's been great knowing you for all these years, and it's great to know other people who have the same values and vision and understand what real money is and how to protect and save yourself literally from a monetary destructive period. I've enjoyed buying all these monster boxes of silver from you, by the way. I can say nothing but positive reviews from all of your great service, and thank you for all that in the past decades. Yeah, so I mean, I'm more in the information realm. I love to invest in physical. I started off the site in 1995 as a hobby, investing in gold and silver. We have one of the largest audiences of gold and silver investors in the world, goldseek.com. We just celebrated 30 years online, and silverseek.com. We've been online since 2023. So those are the primary sources. I'm active on X, at goldseek is my handle there. And I will be in Vancouver next week on Sunday and Monday, speaking about silver and gold and my top picks, and looking forward to actually getting to interview Andy for the first time too. So that'll be fun to see you in person there and catch up.
Likewise.
And hopefully go to a positive gold and silver investment resource conference, because boy, they've been so sad. It's been like going to a funeral for the last decade plus. The amount of interest by the Western investor has just been missing. And I think finally this year we'll see a big shift in that and finally see some positive energy come.
Yeah, man, I agree. I think sometimes in life and in business, you just got to have really strong fingertips to be able to hang on, to see the times like we see now. And the people that have hung on, I think have passed the test of ethics, of character, of integrity, of mission, of what they're trying to do and to contribute. And you as a very young man and now as a father of two kids, soon to be three, I think you have done that. And I think anyone who knows you, and hopefully those who are getting to know you here through this video, will understand that. And you are someone to listen to. And anyways, Pete, honestly, brother, thank you for coming on. It was great to catch up with you. I look forward to seeing you and jumping on your show next week when I see you up in Vancouver. Safe travels. And thanks for your candor, and look forward to catching up with you soon, buddy.
Look forward to seeing you soon, man. I appreciate it, Andy. Talk to you soon.
See you, bud.
Peace.
This is Little by Little with Andy Schectman.